Welcome to today's What Will Move the Market show. I'm your host Prem. It's Monday, January 12th, 2026, and here is everything you need to know as the markets open for today. Let's start with Wall Street's strong finish to last week. On Friday, the Dow Jones, S&P 500, and Nasdaq all wrapped up their opening week of 2026 on a positive note. The Dow closed at 49,504, up 0.48%. The S&P 500 reached a record close at 6,966.29, gaining 0.65%. The Nasdaq added 0.81% as semiconductor stocks rallied on optimism around artificial intelligence and chip manufacturing. Behind these gains was a better-than-expected labor market report for December. The unemployment rate fell to 4.4%, though job growth disappointed at just 50,000 positions, reinforcing Wall Street's view that the Federal Reserve is likely to hold interest rates steady through the near term. The semiconductor rally was led by heavy hitters in the tech space, with Intel notably surging 8% after Trump praised the company on social media. Overall, a constructive end to the week set a positive tone heading into today's trading. On the Indian ADR front, we saw weakness across the board on Friday. Infosys traded at $17.83, down 1.16%. HDFC Bank closed at $33.10, declining 0.87%. ICICI Bank slipped to $30.66, with a steeper 2.11% loss. However, Reliance Industries showed strength, trading at $65.70, up 0.92%. These overnight ADR moves suggest mixed sentiment ahead of the Indian Open, with export-oriented IT services and banks under pressure, while energy names find support. Now turning to Asian markets, the region is set to build on Friday's optimistic momentum. Japan's Nikkei 225 closed on Friday at 53,864, with expectations of solid opening moves driven by Wall Street's strength. China's Shanghai Composite rose 0.92% to reach 4,719.4793. Hong Kong's Hang Seng added a modest 0.15% to finish at 26,379.70. The Asian strength reflects easing China-Japan trade tensions after Beijing reassured Tokyo that export controls on dual-use items would not impact civilian commerce, a relief that calmed earlier jitters. Turning to GIFT Nifty, the index futures are trading at 25,807, essentially flat on the day with a minus 0.03% change. This suggests the Indian market may open largely unchanged from Friday's close, awaiting fresh triggers as investors assess the week ahead. On the global front, markets are holding their breath for a Supreme Court ruling on Trump's tariffs, expected by Wednesday of this week. This decision could reshape trade policy and has major implications for businesses and the investment community worldwide. Additionally, the focus on Fed policy continues as markets price in the possibility of rate cuts later this year, supported by the softer jobs data. For India, this global backdrop, combined with persistent foreign institutional investor selling pressure, adds an extra layer of caution. FIIs have withdrawn approximately 12,000 crores in rupees during the first 9 trading sessions of January, extending a selling spree that began in the latter part of 2025. Domestic institutional investors have provided some cushion with 17,900 crores in net purchases, but the global headwinds are proving difficult to overcome. Investors should watch for any developments on India-US trade negotiations that could influence FII positioning. Looking at the technical setup for today, Nifty 50 closed Friday at 25,683, down 0.75% for the session. The index has broken below key short-term levels and closed below its 50-day simple moving average, indicating underlying weakness. Immediate support sits at 25,600, with the next level down at 25,450. On the resistance side, any pullback may meet selling near 25,750, with stronger resistance at 26,000. The Bank Nifty, closing at 59,251, also shows bearish signs. Key support for the banking index lies at 59,000 and 58,800, while resistance is seen at 59,500. The overall technical picture remains cautious with momentum indicators in oversold territory, suggesting volatility will persist, but any recovery attempts should be treated as selling opportunities in the near term. On commodities, crude oil is trading around $59.07 per barrel, up 0.51% as global energy markets settle. Gold continues its uptrend, trading at $4,577.467 per ounce, up 1.52% on the session. Silver is performing even stronger at $83.4143 per ounce, gaining 4.39%. Natural gas rose 1.81% to $2.9407. These commodity moves reflect expectations for accommodative central bank policies globally, supporting precious metals, while energy markets remain balanced between easing global supply concerns and demand expectations. For traders and investors looking at today, the key theme is caution amid structural challenges. Foreign investor selling, weak technicals on Indian indices, and global uncertainty around tariffs suggest this may not be a strong buying day on rallies. Rather, use any recovery attempts as opportunities to reduce risk or lock in profits if you've been holding positions since the rally. The market will likely remain range-bound and volatile, so preserve capital, stick to your stop losses, and avoid chasing moves. Watch for any news on the India-US trade agreement, as clarity there could provide the silver lining needed to stabilize flows and sentiment. Stay tuned for the evening wrap and send in your questions. Subscribe to this podcast to hear US every morning as the markets open. I'm Prem, and we'll be back tomorrow morning with the latest market insights.